In this video, I wanted to talk to you about one of the most important concepts of trading price action and SMC, and that's inefficiency and efficient price action, known as imbalance. If price is inefficient, then we also refer to that as imbalance. So essentially, efficient and inefficient price action has been around in the market since the day started. And it usually means when liquidity is dried up and we start to see low volume in the markets, and then we see an impulsive move, whether that be due to macro data, or it's usually fundamentally driven. We'll see price break levels of structure, impulsively move away from area, and it'll leave an imbalance in price or inefficient price action. So, if we have, for example, these candles here, these all efficient, because the wicks are overlapping the wicks of every candle. Now the market wants efficient price action. The market wants price to be efficient. So, when we have big candles like this, a big impulsive move, we have gaps in between these wicks, and this is what we would call inefficiency. Now, if I just mark it up, so you can see it, we have inefficiency there. We also have inefficiency between that candle and this candle, and we have a small portion of inefficiency just up here. The reason why we use it as one of the most important concepts is because we can use this to target our moves. So, if we have large gaps of inefficiency, then we can target these areas. As we know that price has to rebalance, the price has to gravitate back towards these areas of inefficiency or imbalance to rebalance price and refuel a big move. So, we can often utilize it when we are setting our interest. So, for example, if we have a bullish order block and there is some inefficient price action, just resting above, that would give me confidence that price is going to revisit this area. It doesn't have to revisit it now. It could be next week, it could be a month, it could be a year down the line, but more often than not, it comes to rebalance and grab the liquidity. So, let me just go through a couple of examples of how we can utilize inefficient and efficient price action into trading style to give us the edge over the markets. So, as you can see here, we have a break of market structure. So, this would have been a daily swing high. This would have been a daily swing low. So, we broke this day's swing high quite impulsively. As you can see, we have left a big portion of inefficiency. So, let's just draw this on here. We have inefficiency or imbalance. So, we know that the market is more than likely going to gravitate back towards this area before fueling a buy position. So, what we can do is we can draw our daily order block, which will be here, and this works across all time frame. The markets are sensitive and they're fractal. So, whether it be the 1 minute time frame, the 15th, the 1 hour, or the daily, or even the monthly, you will see these inefficient areas of price getting rebalanced before moves are either reversing or continuating. So, as you can see, we've got our daily order block. Price is impulsively moved away. This is the daily time frame. So, this is a big move. This would have cost a lot of money to move price this much. And as you can see, price has come back to this daily order block and it's filled all of this imbalance before getting the fuel that needed to push the upside and cause the start of a high time frame bullish uptrend. You can see the power of it on a daily time frame. I mean, we don't tend to not use risk entries on daily order blocks. That doesn't mean you can't, it's just something that doesn't fit my personal plan. But if you were to set an order here, target the highs here, you know, you've just built a trade over there. Purely based on a daily order block, which have efficient price action left over to fill, and you're targeting inefficiency. You have some inefficiency here, some inefficiency here, and some inefficiency here. So, price has a good reason to continue. And if you look just up here, price had inefficiency. So, we just draw the inefficiency between these two candles here. You can see how accurate the liquidity grab is. You've pushed price right into this area of inefficiency to rebalance price. And then we've started to fuel a move to the downside. This is a great example of how we can use inefficiency for our entries. I'm looking for inefficiency just above our chosen order block for entry, whether that be a risk entry or a reduced risk confirmation entry. We can also utilize this to target our trades. So, we know that price is likely to come up here at some point. So, by targeting this area or taking profits here or removing the majority of a position, it is a great way to target for your trades. Let me just show you another example down here. So, as you can see again, we have broken structure to the downside. We've got a daily supply zone, so a daily order block, and we've got some inefficiency between the wick of this candle and the bottom of this wick. So, we've got a gap here. Now this impulsive move could have just been general impulsive nature. It could be macro related, or it could be just due to volatility. But as we can see, we have left some inefficiency and we've left a daily area of interest. So, price has broken structure, it's came back, it's filled the liquidity, it's mitigated at least 50% of the order block before moving to the downside and continuing in a bear trend. So that's really how we can utilize inefficiency. If you are still trading retail strategies, such as flags, etc., it's a good way to incorporate inefficiency you're trading. For example, you're looking to go short at the top of a continuation bear flag, and you can see that we've got some inefficiency rest in where you would normally place your stop loss. You can quite simply just increase your stop loss size, just to cover that inefficient price action. As you know, that price will generally gravitate back towards that, as a magnet, more often than not. So, it just gives you a bit of an indication of what's potentially going to happen next, or what's going to happen sooner or later, and it will help you have an edge over the market, especially when you start looking at the lower time frames for execution. Anyway, hope you enjoyed the video. Any questions, please feel free to drop a comment below.